Good morning. Here is today's Korean economic news briefing. We begin with a series of significant announcements from the Ministry of Economy and Finance, signaling both proactive policy measures and an ambitious outlook for the future. The ministry recently concluded a 5-day intensive AI training program for its key officials, from deputy directors to directors, as a signal of fundamental innovation in their working methods. This pilot program, which involved hands-on project creation, is set to expand from April to include weekend-intensive courses for all employees. This initiative underscores the government's commitment to embracing the AI era and enhancing efficiency across public administration, a critical move for a technologically advanced economy like Korea. In a related development, the Ministry of Economy and Finance announced plans to issue 210 billion won worth of individual investor national bonds in April. Notably, this issuance will see the introduction of a new 3-year maturity bond, alongside existing offerings. The total issuance volume has been expanded by 30 billion won to accommodate the new product, with the 10-year bond making up the largest portion at 110 billion won, boasting an attractive average annual yield of 5.9%. This move aims to provide stable investment opportunities for individual investors while diversifying government financing sources. It reflects a strategic effort to cater to a broader range of investor preferences and to stabilize domestic financial markets. Perhaps one of the most anticipated economic events for April is the official inclusion of Korean national bonds into the World Government Bond Index, or WGBI. This major milestone is projected to attract up to 80 trillion won in foreign capital to the Korean bond market between April and November, with a gradual inflow expected. Market analysts anticipate that this substantial influx could lead to a stabilization of interest rates by 20 to 30 basis points in the second and third quarters. This news is especially significant as it promises a much-needed boost to the bond market, which has seen considerable contraction recently due to global geopolitical tensions. The WGBI inclusion solidifies Korea's position as a more mature and attractive market for global fixed-income investors, enhancing the overall stability and liquidity of our financial system. However, the global landscape remains fraught with challenges. The Ministry of Economy and Finance, in collaboration with the Export-Import Bank of Korea, is actively monitoring the swift execution of a 10 trillion won policy finance program designed to counter the prolonged Middle East conflict. As of March 25, about 20% of this fund has been disbursed, providing crucial support, including loan repayment deferrals, for small and medium-sized enterprises impacted by the ongoing crisis. This proactive measure highlights the government's commitment to mitigating external shocks and safeguarding the competitiveness of Korean businesses operating in a volatile global environment. Looking at the broader macroeconomic picture, rising oil prices and surging sovereign bond yields are flashing warning signs for the U.S. economy, with some economists now raising concerns about an impending recession. The escalating Iran conflict is seen as a key driver, pushing energy costs higher, increasing borrowing expenses, and dampening stock market performance. This triple threat poses a significant burden on both businesses and consumers, leading to a downward revision of U.S. growth forecasts by economists cited in Bloomberg. In line with this, the OECD has also lowered its economic growth forecasts for several major Asian economies, including Indonesia to 4.8% and significantly for China and India. The report warns that if current supply chain disruptions persist, oil and gas prices could climb an additional 25% beyond current projections, potentially shaving 0.5 percentage points off global GDP in the second year and fueling consumer price inflation. Domestically, the government is signaling a continuation of its active fiscal policy into next year, with the preliminary budget for 2027 potentially exceeding 800 trillion won. This comes as the national debt ratio is expected to surpass 50% of GDP this year, raising some concerns among fiscal watchdogs. The government justifies this expansionary approach by emphasizing the need for preemptive responses to 5 structural changes, including the AI transition, and new fiscal demands arising from shifts in the Middle East geopolitical landscape. Turning to the financial markets, the heightened tensions surrounding the Middle East conflict have sent shockwaves through global bourses. The Korean stock market, along with those in Japan and Taiwan, saw a synchronized decline today. The Kospi index closed at 5,277.30, down 2.97% from the previous trading day, having plunged over 4% in early trading. Foreign investors were significant net sellers, offloading 2.13 trillion won, while individual and institutional investors bought up shares. This broad market downturn, driven by fears of an escalating conflict, reflects growing fear, a combination of stagnation and shock, among investors. Donald Trump's remarks hinting at the U.S. taking control of Iranian oil and the possibility of ground troops further fueled market volatility, causing the Kospi to briefly drop by as much as 5%. The $1 exchange rate also reflected this tension, closing weekly trading at 1,515 won and 70 jaeon, up 6 won and 80 jaeon from the previous close. In the realm of industry and technology, the global AI wave continues to reshape various sectors. Korea's cloud computing industry, a critical infrastructure for the AI era, has seen its annual revenue surpass 9 trillion won for the first time, reaching 9.26 trillion won in 2025, a 25.2% increase from the previous year. This robust growth is largely attributed to the surging demand for cloud services as companies rapidly adopt AI. However, a significant reliance on foreign solutions remains a challenge. In related news, LG Chem is strategically shifting its focus towards advanced materials for AI semiconductors, autonomous vehicles, and next-generation displays, aiming to double its revenue in these high-growth areas. This pivot away from general petrochemicals underscores a broader industrial realignment towards future-proof technologies. Meanwhile, the U.S. is reportedly cracking down on Chinese robots due to backdoor concerns, similar to its approach in EV batteries. This could create new opportunities for domestic robot manufacturers, especially those with U.S. affiliations like Boston Dynamics, a subsidiary of Hyundai Motor Group. Finally, a quick look at the real estate market reveals a nuanced picture. Seoul's rental market is experiencing a shortage, driving up prices for both jaeons and monthly rentals. This scarcity, particularly evident in the end of March, early April moving season, is leading some prospective tenants to consider purchasing homes instead. Demand is particularly strong for mid to low price apartments under 1.5 billion won, often due to more favorable loan regulations. The national standard size apartments, under 85 square meters, continue to dominate the Seoul apartment subscription market for the fourth consecutive year, reflecting shrinking household sizes and escalating pre-sale prices. Interestingly, Seoul's housing market is exhibiting a decoupling trend. While prices in the affluent Gangnam 3GU, Gangnam, Seoko, Songpa, have shown a downward trend for the past 5 weeks, other districts like Sungbuk and Gangseo have seen prices rise, indicating a more complex and segmented market dynamic. To summarize for investors and general viewers, the global economy faces significant headwinds from geopolitical tensions and inflationary pressures, making caution advisable. However, the WGBI inclusion offers a strong positive catalyst for the Korean bond market, and the government's proactive measures in AI and crisis management demonstrate a commitment to future growth and stability. Investors may find opportunities in government bonds and strategic growth sectors like AI and advanced materials, while general viewers should brace for potential continued increases in energy prices and monitor the nuanced trends in the housing market. That concludes today's Korean Economic News Briefing. Thank you for joining us.